IRS Form 8932, credit for employer differential wage payments. So this is one of the general business credits that eligible taxpayers can calculate and then claim on IRS Form 3800, which is the general business credit tax form. So before we complete this form, there are a couple of key terms and concepts that we need to go over. So first, what is an employer differential wage payment? So all of this information, by the way, is in the form instructions that are contained in the form itself. So nothing that is in this video is something that you can't find on your own. But eligible differential wage payments basically are the differential wage payments made to qualified employees for a given tax year. So a qualified employee is a person who's been an employee of the company for at least 91 days immediately prior to the period for which a differential wage payment is made. For the IRS to consider a differential wage payment, the payment itself must meet two requirements. First, it's made to a qualified employee for any period during which the employee is performing service in the uniformed services of the United States while on active duty for a period of at least 30 days. So the most likely scenario for a lot of employers would be National Guard or reservist members that have been called up to active duty. So either for extended training or for deployment or for an activation status where they're actually on active duty for a indetermined period of time. So the second criteria is that the payment represents either all or some of the wages that the employee would be entitled to from the employer if the employee was doing work for the employer instead of being deployed. For example, let's imagine Sergeant Smith is in the Army National Guard. He normally makes $100,000 per year at his employer. He is going to be deployed for 3 months. So that means that there is $25,000 that he would have earned from his employer had he worked for that 90-day period. Now instead, the Army National Guard, let's just say that he is paid $15,000 during that 3-month period. He would otherwise be entitled to $25,000, so his company makes the payment on top of that. So his company pays the $10,000 difference. That would be considered a differential wage payment. However, differential wage payments do not include certain payments that you would have used to claim other tax credits or incentives. For example, in the instructions, specifically the employee retention credit, wages paid between June 30th and January 1st of 2022, or June 30th, 2021, before January 1st of 2022, that would be an employee retention credit. That can't be used to calculate the same credit for, or the same wages cannot be used to calculate a credit for employer differential wage payments. So if you use wage information to calculate a coronavirus related employee retention credit, an employee retention credit for qualified natural disasters, qualified sick and family leave wages, or the employee retention credit that was paid prior to the coronavirus employee retention credit. None of those wage payments can be considered as wage payments that you would include in your calculations here. So the other limitation is simply the calculation of the credit itself. So you're able to claim a credit for eligible differential wage payments up to $20,000 per employee in a given tax year, and you can take a tax credit of 20% of those wage payments. So the limit is $20,000 of wage payments for each employee, which translates to a $4,000 credit maximum for each employee. So finally, a definition, a clarifying point of uniformed services. Most people naturally assume that it's the armed forces. It also includes the Air National Guard and the Army National Guard when they are engaged in active duty for training, inactive duty training, or full-time guard duty. Also the Commissioned Corps, the Public Health Service, and then any other category of taxpayers designated by the President in time of war or a national emergency. This tax credit also is coordinated with several other tax credits. So any credits that you claim for research, whether it's a qualified small employer research credit, whether it's the tax credit for increasing research activities, or if it's the orphan drug credit, any wages that are paid to claim one of those tax credits cannot be used to calculate wage differences. And any credits that any of the research or orphan drug credits that you claim must be reduced by the amount of the credit that you claim for differential wage payments. So again, you cannot use the same wage information to claim two different tax credits. And finally, there's a section of Title 38 of the United States Code, Section 4323, that basically gives certain rules of employment or reemployment rights for employers with regards to members of the armed forces, specifically reserve components. So if a taxpayer is under a court order with respect to a violation of this code section, then they cannot claim a tax credit in that year or in the next 2 years. So those are all of the background information pieces that we need to be able to complete this form. So we're going to start completing this form on behalf of our hero John Doe, who happens to own Doe Enterprises, and his identifying number, which in this case is a employer identification number, or EIN. So a wide variety of taxpayers may be eligible to claim this credit. Any taxpayer entity that can also claim employer differential wage payments. So most of the time it's going to be partnerships or S corporations. It could be cooperatives. It could be estates and trusts. It could even be an individual taxpayer filing Schedule C on their tax return. Whatever the case may be, you would need to make sure you understand how you are filing this form, what taxpayer status you are, so that you can then correctly report on IRS Form 3800. So let's get started. Let's just imagine that John Doe, for whatever reason, has enough employees to where he's making differential wage payments for all of them 100%. So in the tax year, he had a really tough year and he made $100,000 of differential wage payments. No more than $20,000 per qualified employee, but he had 5 employees, so they all got the max. So in this case, he would multiply line 1, $100,000 by 20%. He would enter that into line 2. So now, again, this $100,000 that John Doe is claiming the tax credit for, he cannot then use that as the tax deduction when calculating his salaries and wages. So if he's claiming the credit here, he cannot then use this $100,000 when he's reducing his taxable income, his gross income. Even if you can't take the full credit this year because of the tax liability limit, you still have to reduce your salary deduction by the amount that you put into line 2. In line 3, you're going to report any credits that you might have received from a pass-through entity for these credits. So it could be from a partnership, it could be from an S corporation, it could be from a co-op, it could be an estate or a trust. Whatever those credits are, you're going to add them in. So depending on which type of taxpayer status you are, for example, a partnership would see this on Schedule K1, Box 15, Code P. An S corporation shareholder would find it on their K1 for IRS Form 1120-S in Box 13, Code P. A trust or an estate beneficiary would find this on their Schedule K1 for IRS Form 1041, Box 13 with the code Q. And then cooperative patrons would find this on their form IRS Form 1099-PATR in Box 12. So you're going to report, let's just say that your John Doe's S Corporation is a shareholder in another S Corporation, and his share of that tax credit is $10,000. So we're going to go to line 4, where we will add lines 1 and 2. So if you're a partnership or an S corporation like Doe Enterprises, then we would stop here, report this amount on Schedule K. If you're a cooperative, an estate, or a trust, you would go on to line 5, and we'll walk through lines 5 and 6. For other taxpayers who are not a partnership or an S corporation, for example, if you were an individual taxpayer that happened to file Schedule C, then you would report this directly on IRS Form 3800, Part 3, Line 1W. So now, for estates, trusts, and patrons of cooperatives, you're going to enter the amount that you allocated either to the patrons of the cooperative or to the beneficiaries of the estate or trust. So specifically, a cooperative has specific guidance in the tax code. First, you have to calculate your tax liability. Then you can then allocate the credit within the cooperative to reduce the tax liability to 0. But any excess credit has to be pushed out to patrons. So while the excess is allocated to patrons, if there's a credit recapture, it applies as if you took the full credit, even if you had to push out part of the credit to the patrons. And if you're subject to passive activity rules, then you would need to also complete IRS Form 8810, which is the corporate passive activity loss and credit limits, to determine how much of the allowed credit that must be allocated to patrons. For estates and trusts, you need to allocate this tax credit in the same proportion, like to all of the beneficiaries, in the same proportion as you allocated income. So you would need to enter the beneficiary share here, but on each of their K1s, you would need to make sure that each beneficiary receives the tax credit in proportion to the amount of income that they're entitled to. And if passive activity rules apply, you might need to file IRS Form 8582-CR, which is the tax form to help you calculate passive activity credit limitations. So for line 5, we entered $10,000. We're going to subtract that amount, and we're going to put that on IRS Form 3800, Part 3, Line 1W, same as if you were stopping at line 4. So that's all we have for this tax form. And if you want more detail, we actually break down all of this information plus coordination with different tax credits and other frequently asked questions in our article. You can find the link to our article in the show notes, or you can go to our website. Simply go to teachmepersonalfinance.com, type in IRS Form 8932 in the search bar, and you should see our article appear. If you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. As always, if you have any questions or comments, please post them in the comments section. Thank you very much and have a great day.